Okay, hi everybody. A very warm welcome to CPF and Your First Home webinar. I'm Phyllis, your MC and speaker for today. So, in collaboration with the Housing and Development Board, we also have Patricia here, who will be sharing in the second half about the government support and policies for HDB flats and the new flat classification framework. Okay, so I think most of you here are either looking to BTO or maybe are in the preparation stages, or maybe some of you have already secured your homes. Congratulations! And maybe you're just here to know more about the timeline, maybe what to expect between applying for the BTO to getting your first home. So, welcome, and hopefully, after today's session, you get a clearer understanding. Okay, before we go into that, here are some admin matters to go through. So the chat function will be used for us to broadcast messages, such as announcements, and I think later we will drop some useful links as well. And we will also be having a Q&A session. So if you have any questions, you can submit them via the Q&A tab. Do take note not to share your personal details, okay? And also, if you are facing any technical errors, you cannot hear me, I'm not moving, please leave the session and rejoin, okay? Okay, and now let's get started. Okay, so I just want to get to know you guys a little more. So let's do a quick poll. I think you should see the poll appearing on your screen, right? I just want to see what are you guys here looking to buy? Is it a BTO flat or resale flat or maybe even a private property or EC? Okay, I'll give you guys a little, maybe a few seconds to vote. And while you guys are voting, maybe I'll just share why I'm here today. Okay, so actually for myself, I also recently bought a BTO flat. So then I thought, who better to share about all these things and this journey than somebody who has just done it, right? Yeah, that's why I'm here today. But okay, I'm seeing the results and I think most of us here, oh, it's like a 54% 43% split actually. But the most of us are looking to buy a BTO flat. Okay, so similar to me. Okay, let's move on. Okay, so let me first start off by sharing with you about our three key needs in life and how CPF supports us in these areas. So, firstly, a steady stream of lifelong retirement income, which allows us to meet our daily expenses such as food, transport in our golden years so that we don't have to worry about outliving our savings and needing to re enter the workforce or rely on others to cope with this expense. And also, secondly, we have insurance and savings for healthcare to help us cope with large medical bills, as this will easily wipe out our retirement savings. So we have MediShield Life that helps to offset a portion of our medical bills to ensure all of us have access to basic healthcare services. And for those of us who seek better healthcare coverage, we can also consider purchasing private insurance to supplement the MediShield Life. Okay, the last but not least, which is also why we are here today, is that we also need shelter and safety, and this is where home ownership comes in. So CPF helps us towards the goal of a fully paid home, which gives us the security to age in place without having to worry about mortgage loans or increase in interest rates. So this is also an avenue where some people tap on housing monetization schemes, such as the lease buyback scheme, to unlock the value in their homes to further supplement the retirement income. Okay, so when thinking of buying your homes, right, buying your home, there are the ABCs. So firstly, the A would be the ability to pay. So when we are thinking of buying houses, right, I think there's a lot of factors that comes into play. So like, for example, do I want to stay in a 3-room, 4-room, 5-room BTO or resale flat, or like where do I want to stay? Maybe I want to stay near my parents. Maybe I want to stay at a specific location in Singapore. So all these are like factors that we will consider, right? But there's also one very important factor to consider, which is our ability to pay for the flat also. So yeah, when you are choosing your flat, right, remember to take this very important consideration into account lah. Okay, and then for B, we have budget for your flat. So budget means like, oh, okay, how much down payment you need to pay, how much are you budgeting for your renovation, your furnitures, all this. Okay, so that is budget. And then we have credit to finance a flat purchase. So how long you intend to pay off the loans that you've taken to pay for this house. Okay, so actually this Patricia will share a little bit more about this later, so I'll leave it to her. I'll move on first. Okay, so I think most of us here should be likely below the 35 years old age group. So I think buying house is like a first time thing, right? For me also it's like a first time thing. So it's like so different because it's not just buying something small, it's like my real first big ticket item. So I just want to introduce you guys to two ratios to let you guys know if you are really buying within your own means. So because I think also even for myself as a personal experience, right, when I look at the prices of the flats is like in 100,000, so I don't know whether it's really within my means or not, because I also need to take a loan to pay for this, right? So the first ratio that I want to introduce is the mortgage servicing ratio. So it's a good practice to keep our mortgage servicing ratio to less than 30% of our gross monthly income. So for example, you and your partner's combined income is $5,000, right? Then your monthly mortgage should ideally not exceed $1,500. And also, I think apart from mortgage loans, right, I think some of us might have other loans, our personal loans, our maybe car loans, maybe study loans that we haven't finished paying off. So for this, there's another ratio called the total debt servicing ratio, which encompasses our other monthly debt repayments. So for this ratio, it's a good practice to keep this to less than 55% of our gross monthly income. Okay, and for example, you and your partner's combined income again is $5,000. You should ensure that after adding up all the monthly mortgages, including the housing one, it should not exceed $2,750. Okay, so I think for those of us who are still in the home searching process, these two ratios are quite useful because it helps us set a budget to narrow down the houses that we are looking at, so that it's easier for us to make a choice. Okay, and also as a tip for financial prudence, we can consider allocating less than 25% of our gross monthly income to housing installments. Okay, and as we are considering our payment options, right, one thing to take note is that our CPF contribution to our OA account actually reduce when we get older. So you can see from the table here, right, the OA contribution goes down, whereas the SA and the MA contribution goes up. So, for example, right, if you're under 35, the monthly contribution to your OA is $1,500, and then maybe when you're below 35, you decide to take a loan which you need to pay $1,500 from your OA. You need to take into account, or you need to note that when you reach the age above 35 to 45, right, your OA contribution will drop. So this means that your outflow might even be more than your inflow. I mean, of course, this is assuming that your salary stays the same lah. But I think it's a quite important thing to take note of lah. So also try your best to pay off the mortgage loans as early as possible, because more of your CPF savings will be allocated towards your retirement as you grow older. Okay, so we also strongly encourage members to pay off their homes, ideally before 55 years old, because that is when the age of our that 55 years old is the age where our retirement account is created. Yeah, so do keep that in mind when we are planning. And then also, if you are still planning your first home purchase but you're not very sure what's your budget, right, you can try out our home purchase planner. So you can scan the QR code on the screen, or you can go to the link. I think there's a short link there. So with this planner, right, you can input your financial profile. So for example, like your gross monthly income, your monthly expenses, and then it will estimate the property price and the amount of housing loan that you can afford. So as I mentioned earlier, right, your CPF savings form part of your retirement savings. So as an additional step, you can also put that into your retirement payout goals and see how the cost of the housing that you've selected may impact your ability to reach that payout goal lah. Okay. And then now, let's talk about OA savings. Okay, so things that you can use your OA for uh, are stamp duties, legal fees, down payment, home protection scheme premiums for HDB flats, and also housing loan taken for the property purchase. Okay, so some of you might be wondering what home protection scheme, in short HPS, is. So HPS is for CPF members who own a HDB flat and are paying their monthly housing installments using CPF savings or cash. So it's a mortgage reducing insurance that protects you and your loved ones from losing your HDB flat in the event of touch wood, death, terminal illness, and also total permanent disability. And please note that other payments, right, for example, your resale levy, your cash over valuation, agent fees, renovation, furniture, all these cannot be paid by OA. So you'll have to budget for that in cash, okay? Okay, so I think for myself, something to share is also because it's quite recent, I actually just made my down payment. I just made my down payment on Sunday. So for myself, right, there's something that I did or me and my partner have done. So in terms of our OA usage, right, we actually kept like an amount in our OA to not say block out, but we kept a sum in there just in case, one of us in the event like one of us lose our jobs, at least that's like a rainy day sum there. So I think this is also something that you can consider or at least like discuss if it's applicable for you lah. Because I thought it's more safe to have savings in your OA and not just use up all of it lah. Mm. Okay, so yeah, it might seem a bit daunting as of now, but hopefully this will make you understand a little bit more. Okay, let's move on. Okay, so okay, yeah, although just now I mentioned earlier that you can use your OE savings to pay for your house, right? There's also housing limits in place lah to ensure that we don't overspend on our OE savings to service our housing loans. So the reason behind this is because we don't want CPF members to overconsume their CPF savings for housing, which would mean less for their basic retirement needs. So if you recall, right, at the start of the webinar, I actually showed like a triangle which shows, I think, retirement, healthcare, and housing, right? So the more you use for the housing portion, actually, the less you will have for your retirement and your healthcare expenses. So this is why we put the housing limits in place. Okay, so the CPF housing limits in place would depend on the three factors. So the first one is type of property, which is HDB or a private. And then second one is the type of housing loan you take, a HDB loan or a bank loan. And then thirdly is whether the property's remaining lease can cover the youngest buyer using CPF to age 95. So for example, if you're 40 years old, then the house should have at least 55 years more of lease. If not, the amount you are able to use will be prorated. Okay, now let's look at the various scenarios and the applicable housing limit. Okay, so for example, you're getting a new HDB flat, for example, BTO, and you're taking a HDB loan, then okay, this one is a bit straightforward lah. There's no applicable housing limit. But if you're getting a resale HDB flat on a HDB loan, then the amount you can use will be up to the lower of the valuation or the property price at the time of the purchase. However, if the individual owner can set aside your basic retirement sum in your CPF account, then there will be no limits. Okay, and lastly, if you are getting any type of property on a bank loan, the amount that can be used will be up to the lower of the valuation or the property price at the time of the purchase. And if the individual owner can set aside their basic retirement sum in their CPF account, you can use a further 20% of your OE savings. Okay, it's a bit confusing, so I'm going to try to use an example to illustrate, right? Hopefully you all can understand better. So here we have Claire and Chandra. So we can see that the valuation price, which is 500,000, is lower than the property price, which is 520,000. So in this case, we would take the 500,000 as the applicable housing limit. And then next, we will see if Claire and Chandra are able to set aside their BRS individually. So if they cannot set aside their BRS individually, then it's quite straightforward. They can use up to 500,000, be it a HDB loan or a bank loan. But if they're able to set aside their BRS and tapping on a HDB loan, then they will be able to use their remaining OA to finance their remaining housing loan. But if they're using a bank loan instead, then they will only be able to use up to a maximum of additional 20% of the lower of property price or valuation price, which in this case would be 600,000 lah. Okay, so if you wish to estimate how much OA savings you can use for property purchase, right, you can scan the QR code on the screen, which is our housing usage calculator. Then you can key in the type of property, type of loan, and the property price. Then you will be able to check the estimated amount of OA savings you and your co-owner can use. Okay, and as I mentioned earlier, right, there's two types of loans you can use to finance your property purchase, which is the HDB loan or the bank loan. Okay, so from 20th August 2024, the maximum loan amount for HDB loans have lowered from 80% to 75% to align with the bank loans. And then, so that's the maximum loan amount. And then for the payment mode of the down payment, if you get a HDB loan, you'll be able to pay your down payment CPF, cash, or a combination of both. But if you take a bank loan, at least 5% must be in cash. And for the interest rate, for HDB loan is at 2.6%, which is pegged at 0.1% above our OA interest rate. And then for bank loan, it will depend depending on which bank it is from. And yeah, so when you are taking up the loans, right, you might want to consider these differences and then select a loan that suits you. Okay, I will use example to illustrate again because I just went through a lot. Okay, so we can see Claire and Chandra again. So they decided to get a HDB BTO flat this time at $500,000. So if they take up a HDB loan, they will have to pay a minimum down payment of 125,000 in CPF, cash, or combination of both. But if they take a bank loan, then the maximum loan amount is still the same, but in terms of down payment, they will need to pay 5%, which is 25,000 in cash. Then the rest of the 100,000 can be in CPF, cash, or a combination of both. Okay, so when we are looking at the prices of our houses, right, it's also important to consider the interest payments lah, because many times we just take like the purchase price as the full amount, but depending on the type of loan you take and also how long you take to pay off the loan, right, the total cost is actually much higher because there's a lot of interest. So take note of the interest payments, factor that into the cost when you are selecting your dream home. Okay, and also, actually, once you have purchased a property using your CPF, right, you can check how much more of your CPF savings you can use before you hit your applicable housing limit. So, you just log into my CPF online services, and then I think you can click on the home ownership dashboard, and you should be able to see something like this. Okay, so you can try this out at your own time. Also at the home ownership dashboard, right, you can also check how much CPF to refund if you decide to sell your property. Although I think most of us here are looking to buy the first home, right? Maybe not at the selling stage yet, but this is something that I just want to share with everybody because I think it's a very important thing that quite a lot of people are not really aware of lah. So I thought to share. So when you sell your house, right, you actually need to refund the principal amount plus the accrued interest. So accrued interest means that if you didn't use your CPF savings for the property purchase, right, your CPF savings would have grown with interest, and that would have gone to supporting your retirement needs. Therefore, when you sell your property, you will need to refund the full amount, the principal amount, and the amount of interest that you've accrued on this amount to restore your retirement savings. Okay, and at this point, I just want to delve a little bit deeper about Home Protection Scheme, which is meant to further safeguard members. So, please note that you would have to be insured under HPS if you are using your CPF savings to pay for your monthly housing loan installments on your HDB flat. HPS premiums can be paid from your OA, and I think previously I mentioned HPS is to help insured members pay their outstanding housing loan for HDB flats. So this is up to their HPS sum assured in the event of insured member's death, terminal illness, or total permanent disability up to age 65. Okay, so this means that if you pay the required premium to fully cover your housing loan by HPS, and if you meet with an unfortunate event and qualify for a claim, the outstanding loan will be fully paid up by the HPS insurance, and your loved ones don't need to worry about not being able to pay for the monthly installments lah. And the premiums are affordable, and they are also automatically deducted from the OA. And uh, for those who are paying their monthly housing installments using cash, right? You are also highly encouraged to apply for this. Okay, so with that, I've come to the end of the CPF portion regarding homeownership, and now I'll pass the time over to Patricia. Patricia, please.
Thank you, Phyllis. Hello, everyone. I'm Patricia from HDB today, and I will walk you through everything you need to know about buying your first home. Okay, let's start with the most common question. You might be wondering, can I actually afford a flat? All new flats are priced with generous market discount to make them more affordable. As a result, their selling prices are significantly lower than the resale flats available on the market. For example, let's take a look at the recent February sales exercise. We offer a range of flats at various price points to suit different income levels. Whether you're a single looking for a 2-room flexi flat, a small family in need of a 3-room flat, or a larger family looking for a 4 or 5-room flat, there's something for everyone. While you might have seen headlines about million-dollar HDB flats, it is important to know that these are actually rare and make up only a tiny percentage of all flat transactions. Typically, these highly priced flats are much larger in size, like mansionettes, jumbo flats, or those with exceptional locations. For example, flats right next to an MRT station or other key amenities, or those on very high floors. Because of these unique features, they attract more attention and naturally command higher prices. But don't worry, as you can see, the majority of resale flats are priced well below the $1 million mark. To make HDB flats even more affordable, the government offers a range of housing grants on top of the market discount. Let's take a quick look at the housing grants available to support first-time home buyers. Those buying new or resale flat can apply for the enhanced CPF housing grant. New flats are priced below their equivalent market values at the point of offer so that buyers enjoy a market subsidy. On the other hand, resale flats are priced as agreed between the buyer and seller, which can be more expensive than new flats. To help with this, HDB provides support through the CPF housing grant and the proximity housing grant for those buying resale flats. For those looking to buy a new flat, you can take advantage of the enhanced CPF housing grant, which offers up to $120,000 in support for first-timer families. The EHG is tiered based on the monthly household income of all working persons listed in your HFE letter application. As you can see, more support is given to lower income households to help make owning a flat more affordable. To qualify, families with a monthly income of up to $9,000 can receive up to $120,000. while singles with an income ceiling of $4,500 are eligible for up to $60,000. So for example, if you and your partner are each earning $2,900 a month, which means your combined household month income would be $5,800. At this income level, you would receive $50,000 in grant, which you can use to pay for your flat. Likewise, for a household income earning about $8,600 monthly, you would receive $5,000 in grant. So for first-timer households considering a resale flat, you can apply for the CPF Housing Grant for Families, which is represented by the green bar here. If you are eligible for the family grant, you can also apply for the enhanced CPF Housing Grant of up to $120,000. The income ceiling for the family grant and EHG for families is set at $14,000 and $9,000 respectively. For those looking to live closer to their parents, the proximity housing grant would be useful. There's no income ceiling for this grant. If you buy a resale flat within 4 kilometers of your parents' home, you can receive $20,000. And if you're buying a flat to live with your parents, the grant amount is even higher at $30,000. To assist young couples, we also offered the deferred income assessment to those who are buying a flat from HDB. These allow your income assessment, which determines how much grant and loan you're eligible for, to be deferred until about 3 months before you collect the keys to your uncompleted flat. If you're eligible, you can apply for a flat first and then defer the income assessment to a later stage, just before key collection, when you're more likely to have a steady income. On top of the deferred income assessment, applicants may also apply for additional support through the staggered down payment scheme. This scheme helps you to pay your down payment in 2 installments. Part of the down payment is paid when you sign the agreement for lease, and the remaining part when you collect the keys to the new flat. Under the staggered down payment scheme, instead of paying the usual 10% or 20% down payment, depending on whether you choose an HDB or a loan from the financial institution, applicants only need to pay 5 or 10%. Even better, if you're eligible for both the enhanced staggered down payment scheme and deferred income assessment, your down payment could be as low as 2.5%. Let's now talk about how to finance your new flat before deciding on the type of flat or location. So let's say your combined monthly income could be around $5,800. With this income, let's assume you had been working for about 1.5 years, with monthly CPF ordinary account contribution of $1,334. You decided to buy a 4-room standard BTO flat in Yishun for $350,000 and are eligible for the enhanced CPF housing grant of $50,000. So if you're taking an HDB housing loan, the down payment would be 10% of the flat price, unless you qualify for the staggered down payment scheme. The remaining balance of 15% will be due at key collection, which could be 3 to 4 years later. So by the time the flat is completed, say 4 years later, you would have enough savings to cover 25% of the flat price, which amounts to $87,500. This means you need to take out a housing loan of $212,500. The monthly repayment for this loan will be $965 over a 25-year period. The good news is that this monthly repayment can be fully covered by your monthly CPF ordinary account contribution. So no cash out of pocket is required, and your CPF contribution will cover the entire repayment. So let's look at another case. This time, your combined monthly income could be around $8,600, and you've been working for 3 years with monthly CPF ordinary account contribution of $1,978. You decided to buy a 4-room plus flat in Queenstown for $650 and are eligible for an EHG amount of $5,000. Again, when the flat is completed, say in about 4 years, you have enough savings to cover 25% of the flat price, which amounts to $162,500. This means you need to take out a housing loan of $482,500. The monthly repayment for this loan will be $2,189 over a 29-year period. In this case, you need to top up an additional $211 in cash each month to cover the difference. This example gives you a clearer picture of how the numbers add up when buying for your home purchase. We're happy to share that thanks to these measures, most home buyers spend less than 25% of their monthly income on their mortgage repayment. Plus, they can use their CPF contribution to cover the bulk of their HDB loan, meaning little to no cash is needed out of pocket. I hope this will give you a clearer understanding of how affordable it can be to own a flat. Now, let's move on to the next important question. Can I actually get a flat? The main source of flat offered by HDB is our BTO flat. These are sold at subsidized prices with 99-year leases. Looking ahead, we're committed to ensuring there's a steady supply of flats to meet the demand for housing. Between 2025 to 2027, we plan to launch more than 50,000 flats, and specifically this year, over 25,000 new flats will be launched. So if you're planning to buy a flat, rest assured, there will be plenty of options available. These upcoming flats will be spread across a variety of locations, including new housing areas where we're building flats for the very first time. For those of you looking to live in the north, you'll find flats in Woodlands, North, Sembawang North, and Chincharu in Yishun. In the east, we're offering flats in Bayshore, and in the west, Tengah is developing very quickly. We're also focusing on attractive locations near the city, such as former Keppel Club site near Vivo City, Pearls Hills near Outram Park, and Mount Pleasant in Thomson Novena area. You may have heard me mention terms like standard, plus, and prime flats earlier. Let me now explain the new framework we are now using to classify different types of BTO flats, moving away from the matured, non-matured estate system to one that focuses more on location and flat attributes. Since October 2024 launch, HDB has adopted this new classification framework for BTO flats. In addition, we'll continue to offer a good mix of projects across different regions to meet the diverse needs and budget of Singaporeans. Standard flats are spread across Singapore and make up the largest category of the flat supply. They come with standard restrictions, such as a 5-year minimum occupation period, which means owners must physically occupy the flat for 5 years before renting it out, selling it, or investing in private property. The next tier is the plus flats, for those willing to pay a bit more for better location. These flats come with a 10-year MOP and additional resale restrictions. The aim of these restrictions is to ensure owner occupation and moderate demand and prices to keep these flats affordable for resale buyers. Finally, prime flats are designed for those who are prepared to pay a higher premium to live closer to the city centre. These flats come with the strictest restriction. With this new framework, we hope to maintain affordability and inclusivity while ensuring a good socio-economical mix across our BTO flats and estates. HDB goal is to ensure that every region offers a good mix of all types of public housing. This gives all Singaporeans a range of options to choose from within their preferred regions to meet their housing needs. Since November 2021, we've been launching projects under the prime location public housing model, which helps moderate prices and ensure affordability. We'll continue to use this model under the new framework for prime flats. Since October last year, we've been launching new plus projects in choice location across each region. For example, we have projects in Bayshore in the east. At the same time, we continue to launch standard BTO flats in other locations, which will remain the largest category of our flat supply. This means that in each region, you'll find a good mix of BTO projects catering to different budget and needs. In the central region, you'll mostly find plus and prime flats, while in the west, north, northeast, and east region, there will be a larger focus on standard and plus flats. Under the new framework, which classifies BTO flats as standard plus or prime to better reflect their location and ensure affordability, HDB continues to prioritize first-timer families in the flat allocation process. First-timers are those who have not previously bought a flat from HDB, an executive condominium, or received housing grants for a resale flat purchase. There are a higher proportion of flat supply for first-timer families. In addition, first-timer families are given 2 ballot chances, while young married couples and families with young children receive 3 ballot chances under the first-timer parents and married couples, or FTPMC category. Other applicants receive 1 ballot chance. If a first-timer family is unsuccessful in securing a standard flat after 2 attempts, they will be given an additional ballot chance for every subsequent BTO application for a standard flat. They can accumulate up to 4 ballot chances, while FTPMC applicants can accumulate up to 5. FTPMC applicants also receive first priority under the Family and Parenthood Priority Scheme when applying for a 4-room or smaller standard BTO flat. Of course, we understand that some of you may have urgent housing needs or specific locational preferences, like living near your parents for mutual care and support. In that case, you might want to consider buying a resale flat. Resale flats have minimum waiting time and are available for immediate occupation. Plus, they come in various variety of locations, sizes, and designs to suit different needs. As we mentioned earlier, the median price of resale flats remain within reach for many Singaporeans. And remember, the price of a resale flat is negotiable between the buyer and seller, giving you some flexibility in your purchase. Last but not least, if you're ready to move forward with getting a new flat, after considering its affordability and accessibility, we'll walk you through the next steps in the process. Now, let's take a look at the different stages involved in buying your first home. Before you start your flat buying journey, here's a few important questions to ask yourself. Is now the right time for you to buy a flat? Have you found someone you see yourself building a future with? Are you ready for the commitments both in terms of time and expenses? After all, this will likely be one of the biggest purchases of your life. If you've answered yes to all of these questions, then you're ready to start thinking about what kind of flat you want to apply for. Now, let's take a look at what you need to do. The first step is to apply for the HDB Flat Eligibility Letter through the HDB Flat Portal. This letter gives you an upfront assessment of your eligibility to buy a flat from HDB or a resale flat, receive CPF housing grants including the grant amount, take up an HDB housing loan, and the loan amount you're eligible for. It's important to apply for the HFE letter before you start your home buying journey. The processing time typically takes about a month, but it may take longer during peak periods, such as during a sales launch, so be sure to apply early. Let's go through the eligibility condition for subsidized public housing, which includes both new HDB flats and resale flats. You can apply as a family or as a single. To qualify as a family, your household must include at least one Singapore citizen and at least one other Singapore citizen or Singapore permanent resident. The monthly household income ceiling for buying a new flat, resale plus flat, or resale prime flat is $14,000. This covers about 8 in 10 Singaporean households. There is no income ceiling for resale unclassified or standard flats. For singles, you must be at least 35 years old to apply for a flat. The monthly household income ceiling to buy a 2-room flexi BTO flat or a 2-room resale prime flat is $7,000. For resale plus flats, the ceiling is $14,000. Again, there's no income ceiling for resale unclassified or standard flats. Additionally, to buy a new flat or a resale flat with CPF housing grant, you must not own or have any interest in a local or overseas private residential property or more than one non-residential property. If you do, you can only apply for subsidized housing 30 months after disposing of the flat. These eligibility conditions are designed to ensure that housing subsidies are reserved for Singaporean households who need them most. Singapore permanent resident families can also buy resale flats without CPF housing grants, provided that they have held their PR status for at least 3 years. As part of the HFE letter application, you need to provide your income details for loan and grant assessment. In addition to grants that help cover your home purchase, a large portion of the cost is typically paid through a loan. Keep in mind that the relationship between loan and grants is important. A lower loan amount will typically qualify you for higher grants, while a higher loan amount may result in lower grant. Both are assessed based on your income at the same time. That's why it's crucial to have a clear view of your financial situation and to fully understand the two loan options available, the bank loan and the HDB loan. The eligibility conditions for getting an HDB housing loan are similar to those for buying a new flat, with a few additional credit assessment criteria. At least one buyer must be a Singapore citizen. The income ceiling is 14,000 for families and 7,000 for singles. You must not own or have an interest in a private residential property, nor have disposed of one in the past 30 months. You must not own or have an interest in more than one non-residential property in the past 30 months. You must not have taken 2 or more HDB concessionary housing loans. What if you need a loan but don't qualify for an HDB loan? Don't worry, you can still apply for a loan from a financial institution regulated by the Monetary Authority of Singapore. HDB collaborates with 6 financial institutions, allowing flat buyers to conveniently compare and apply for housing loans without the need to approach each financial institution separately. Flat buyers can apply to the participating financial institution for an in-principle approval, which informs you of your eligibility for a housing loan from the financial institution when applying for an HFE letter. After securing a flat, you receive a letter of offer from your chosen financial institution to confirm the loan offer via the HDB flat portal. The financial institution will communicate directly with you regarding the outcome of your application. If you prefer to apply for a housing loan with other financial institutions, you can also approach them separately. The HFE letter application is fully digital and free of charge. Once the letter is issued, it's valid for 9 months. With this letter, you have all the information you need on your eligible housing options and budget, which means you can confidently begin your search for suitable flats. Now, let's take a look at your flat options. As mentioned earlier, HDB offers 2 main types of flats, the BTO flat and the resale flat. Let's go over some key factors to help you decide between the two. A BTO flat typically takes 3 to 4 years to build and comes with significant subsidies. On the other hand, a resale flat is available for immediate occupancy, but usually comes at a higher price. You also want to consider factors like price, location, and the flat size that best suits your needs. In May last year, we introduced the resale flat listing service on the HDB flat portal. With this service, you can now browse and compare both new and resale flat options, as well as financing options, all on a single platform. The resale flat listing service provides a transparent, reliable, and trusted marketplace for HDB resale flats for sellers, buyers, and property agents. Flat sellers must have a valid intent to sell before they can list their flats, and each seller can only post one flat listing to avoid duplicates for the same flat. Prospective flat buyers must have a valid HFE letter before they can access the seller's contact details and or schedule viewing appointments through the HDB flat portal. With authenticated access to the HDB flat portal via SingPass for all users, the service ensures a more secured and conducive marketplace for sellers and buyers of HDB flats to transact with or without the facilitation of property agents. Finally, HDB resale flat transactions are conducted on a willing buyer, willing seller basis, with the price mutually agreed upon. Buyers can look at the recent transaction prices to determine whether the price being offered by the seller is something that's reasonable. We encourage you to plan your budget carefully, considering your income and mortgage capability to avoid overextending financially. Moving on, financing your flat can feel overwhelming, especially since it's likely going to be one of the biggest purchases of your life. That's why today, I'll walk you through the ABCs of financing to help make the process easier for you. The first step is A, for ability to buy. Start by tracking your stable income and comparing it with your average monthly expenses, including daily spending and any occasional costs. It's also important to set aside some savings each month. Next, factor in future housing expenses, such as monthly utilities, service, and conservancy charges. Finally, don't forget to consider the potential increase in expenses over the years, especially if you're planning for parenthood. The next step is B, for budget. It's easy to get excited, start viewing flats, and even commit to a purchase before fully understanding your budget. We generally see buyers approach their flat budget in two ways. First, there's the backward method. Buyers using this approach commit to a flat purchase first, then figure out how much loan they need. If they can secure sufficient financing, that's great. But if not, they risk wasting time and energy, not to mention the emotional distress of having to give up their dream flat. That's why we strongly recommend the forward method. Start by calculating how much funds you have available, then search for a flat within your budget. This way, you'll have greater clarity and confidence in your purchase, knowing exactly what you can afford. A typical housing budget includes four main components: CPF savings in the ordinary account, cash savings, CPF housing grant, and a housing loan. But remember, when you buy a flat, you're not just paying for the flat itself. There are other one-time costs to consider, such as stamp and legal fees, which are about 2.5% of the flat price, renovation costs, and salesperson fees for resale flats. These expenses needs to be purchased into your overall budget. And of course, it's important to stick to the budget you set and never exceed it. The third step is C, credit. For most buyers, the housing loan will make up the bulk of your budget. You can choose to take a housing loan from HDB or from financial institutions. Many buyers assume they automatically qualify for a housing loan as long as they're working, but that's not the case. All loan providers, including HDB, have their own eligibility criteria, so it's crucial to check your eligibility, understand the terms and conditions, and confirm everything with your loan provider before making any credit decisions. There are three main factors to consider: the loan amount you can get, the interest rate charged, and the repayment period. These will determine your monthly installment and the total interest you pay over the loan period. We recommend taking a smaller loan amount to reduce the overall interest payable. A shorter repayment period can also help lower the total interest in the long run. And remember, the loan-to-value limit for HDB housing loan is 75%, in line with housing loan from the financial institution. Lastly, keep in mind that once you opt for a loan from the financial institution, you won't be able to refinance it with an HDB loan later. Do note that the amount of HDB housing loan and CPF savings you can use for a flat purchase will depend on whether the remaining lease of the flat can cover the youngest buyer until the age of 95 at the time of application. If you're unsure, it's best to check directly with HDB and the CPF board to confirm the specific amount you can use. Now, let's take a look at the overall timeline for buying either a new or resale flat. First, let's walk through the typical timeline for purchasing a BTO flat. As mentioned earlier, you need a valid HFE letter before you can apply for a flat. Since there's processing time involved, it's best to apply early, ahead of the sales launch. During the sales launch, if you're interested in the available flats and your HFE letter confirms your eligibility, you can submit an online application during the application period. Remember, it's not first come, first serve, so there's no need to rush on the first day. When applying, you need to specify your preferred flat type and location. The application fee is $10. After the application period ends, HDB will conduct a computer ballot to determine your queue number. If you're successful in the ballot, HDB will invite you to book a flat. An option fee of up to $2,000 is required. Around 9 months after booking, HDB will invite you to sign the agreement for lease. You will need to make a down payment of up to 20%, 10% if you're taking an HDB loan or not taking any loan, and 20% if you're taking a loan from the financial institution. However, if either you or your partner is under 30 years old, you may be eligible for a reduced down payment, just 5% under the staggered down payment scheme. Alternatively, if you are eligible for the deferred income assessment, then it will be 2.5% under the enhanced staggered down payment scheme. These amounts can be paid using your CPF savings and the enhanced CPF housing grant. Once your flat is completed, you'll be invited to collect the keys and pay the remaining balance using your CPF savings, approved housing loan, or cash. Before key collection, we may review your loan eligibility for those who are taking an HDB housing loan to ensure that there is no change in your financial situation that could affect your ability to repay the loan. With a waiting time of 3 to 4 years from booking to key collection, students will likely be working by the time the flat is ready, which should help with affording the remaining down payment. Secondly, let's talk about the timeline for buying a resale flat. Similarly, you would need to obtain a valid HFE letter. Once you find a suitable flat and the resale price has been agreed, sellers can grant an option to purchase. Buyers have 21 days to exercise the option to purchase and pay the deposit, which is capped at $5,000, including option fee that has already been paid. Please note that if you're taking a housing loan and or using CPF savings to buy a resale flat, you have to submit a request for value to HDB after the seller has granted the OTP. The value will be used to determine the limit on the housing loan and CPF savings you can use for financing. If you are using cash only, there is no need to submit a request for value. Next, submit a resale application. HDB will accept the resale application after verifying the buyers and sellers' eligibility to buy or sell the flat. The buyers and sellers are to endorse resale documents on the HDB flat portal and pay the fees. Thereafter, buyers and sellers will be notified on HDB's approval of the resale transaction. Lastly, both parties will attend the resale completion appointment. The process takes about 8 weeks, from the acceptance of the resale application to resale completion. With this, I hope you now have a clearer understanding of public housing in Singapore after today's session. Here's a few key points I'd like to leave you with. Measures have been put in place to ensure affordability and accessibility of flats to all Singaporeans. It's important that you choose a housing loan that best suits your budget and needs. To increase your chances of securing a flat, you can consider applying for standard BTO projects, where at least 95% of the 4-room and bigger flats are set aside for first-timer families. To further increase your chances, you are encouraged to look out for the projects with lower application rate. Information on application rate is available on the HDB flat portal, which is updated several times a day throughout the sales application window. Remember to plan your finances using the ABC rule before committing to buy a flat. A, for understanding your ability to pay. B, for working out your budget. And C, for securing credit. Where possible, minimize your loan amount and repayment tenor to maximize your savings in terms of interest paid. And most importantly, always buy a flat within your means. And remember, even if you can't recall everything I shared today, don't worry. You can always visit the My Nice Home website, where you'll find helpful guides and tools to get you started on your home buying journey. On the website, there are articles and tips covering every stage of home ownership, from buying your flat to renovation ideas that won't break the bank. You can also find features on flats that have been nicely renovated within a reasonable budget. Plus, there are design tips and home hacks that might come in handy. For latest housing updates, you can also stay connected with us on Instagram at Singapore HDB. Thank you for your time today, and I hope this session has been helpful in your home buying journey. Okay, that brings us to the end of my briefing, and I'll be happy to answer any questions you might have during the Q&A session later. Thank you.